What is up, guys? On Tuesday, I told you guys I'll be showing you guys my entry model and how I take my entries on either NES 100 or US30. This is how I take my entries. I'm only looking for three things when I'm taking my entries and I'm taking trades. And I like to keep my things simple and I don't want to complicate and look for way too many things. I'm only looking for three things to happen at the right time. So, what am I looking for? I'm looking for one, a liquidity sweep. Now, when I say liquidity sweep, I'm talking about a liquidity sweep maybe on a higher time frame, like 1 hour or 4 hour. I'm looking for a liquidity sweep on those time frames. Now, these liquidity sweeps have to happen within a specific time. So anywhere after 9:30 New York time, which is in SA, it's 4:30 p.m. I'm looking for liquidity sweeps on the higher time frames, and I'm looking for my higher time frame PDA levels. So what's a PDA? A PDA is like an order block, a fair value gap, and inversion gap on the higher time frame. So anywhere from 1 hour and up, that's a higher time frame for me. So I'm looking for those those PDAs in those higher time frame charts. Now, once I identified my PDA on the higher time frame level, it could be a fair value gap, an inversion gap, or order block. I go on my lower time frame, and this is where you have to align your time frames, and I'm gonna explain that in a second. So once I have the higher time frame PDA confirmed, then the time is aligned and everything. Now I'm looking for a change in state of delivery in the lower time frames, and then I'm taking my entry on the close above the change in state of delivery. So how to align your time frames? When you align your time frames, you you start on a higher time frame and you look for a change in state of delivery in the lower time frame. So on the daily time frame, if I have a fair value gap lower and we trade into that on the 1 hour, I'm looking for a changing state and I'm taking my entry on the close above. Same for the 4 hour. Fair value gap below, we trade into it. I'm looking for a 15-minute change in state of delivery and we take the entry on the close. 1 hour as well. 1 hour order block or fair value gap below, we trade into it. As soon as we get a 5 minute change instead of delivery, I'm taking my entry on the close. 15 minute, I don't usually trade the 15 minute because I don't enjoy going on the 1 minute time frame, especially when I'm trading things like USDT and NES 100. These markets move very fast and it's very hard for you to get an entry sometimes because it will be moving way too fast on the 1 minute time frame. But if you understand the concept, it shouldn't be a problem. You see a 15-minute PDA on the low or below price, you wait for it to trade into that PDA, you change into your 1 minute and you wait for your changing state and you take your entry on the close above. Now, what does this look like on the chart? I'm gonna find an example. I'm probably gonna use yesterday's price and I'm gonna give it a proper clear example. So if we look at NES 100, we're looking at yesterday's price. It's this candle right here. But we might as well just use the week, so it's fine. We're looking at these four candles, one, two, three, four. Those are the candles we're looking at. And if we look to our left, so from here, we're looking to our left. This is how I would analyze. I'm looking to my left. I'm trying to see is there any level that I could possibly trade from. And I see and I identify this gap right here. There's a gap right here. And there's an inversion fair value gap right here. You don't want to miss these levels. You want to have them and you want to mark them out. And you want to be able to see them while you're trading. So we mark up our first gap and we extend it to the right, and then we mark up our inversion fair value gap. We have to include the mini gap above the thingy. If you've watched ICT's videos, you know why. Okay, now we have our high time frame PDAs identified. This is on the daily. Now I don't usually trade the daily, but I'm gonna show you how I usually take my trades. So we identify our PDAs. Now I'm gonna go into the 1 hour time frame and I'm trying to look for my entries. Now I can only take my entries anywhere from 9:30 New York time. So from there I can take my entries, and I'm only allowed to take entries up until 12. After 12, I can't take any entries on the market. So we don't need that. This is how I frame my trades. On the high on the 1 hour, this is how I would actually take my trade on this day. On the 1 hour, I've already identified. Let me change this gap into red so we know it's an inversion fair value gap. So in the 1 hour, I can see, okay, yesterday we traded into this gap, we closed we closed inside the inversion fair value gap and inside the fair value gap. So we are valid for buying. We closed above this change in state level right here. This is how you frame your trades if you're looking to take trades on a day. I understand that, okay, we closed above this change in state. So what's the price delivery now? I'm bullish coming into the next day, which is this day right here. I understand I'm bullish. Now what could I possibly target? One, this high right here. It's the closest liquidity to me. Two, this high right here. It's the second closest liquidity to me. Now, 9 9 a.m. New York time, I'm looking at the market. It's about 4 p.m. South African time. I'm looking at the market. I'm trying to look for a trade. I'm looking to my left. What's to my left? From here, I'm looking to my left. What's to my left? It's this fair value gap right here. You may not see it as a fair value gap, but it is what it is. It's a fair value gap. So I've marked out my fair value gap. Now from 9 a.m. New York time, now I can start. Now I have what I'm looking for. I know the price is bullish because I have my change in state of delivery right here, and we have already broke market structure to the upside over here. Now I can move on to my aligned time frame. On the 1 hour, I have to look for my change in state of delivery on the 5 minute time frame. So I'm going to the 5 minute time frame. Now on the 5 minute time frame, you might say, okay, you start looking at the market here and you can only take your trades after 9:30. So which is right there. So 9:30 is right here. So I can only start looking for my entries after this point. Now we traded down into this inversion fair value gap on the daily, but we didn't trade into this gap that we identified on the 1 hour and we're looking to trade away from. So we understand that this move going up here is not the original move we should be looking for. So we wait for price to give us what we're looking for. We wait for price to come into a PDA level that we have already identified. We trade into this bullish fair value gap over here at 11:10. We trade into this bullish gap right here on the hour. Now, as we trade into that gap, I've already identified this level here as my change in state level. Why is that my change in state? A change in state of delivery is the last in this bearish example. A change in state and delivery is the last bearish candle to take out a low. So we took out this low, one, two. We took out these two lows. Let me just took out these two lows. That's liquidity, by the way. We took out these two lows. So this is the last set of bearish candles. So we put our change in state on that body. So anything that closes above here is an entry for us. But we can refine this further because why? We traded down here, we traded back up, and we took that low again over here. We took this liquidity again. over here. Now, this makes this my new change in state level. This last bearish candle over here is my new change in state level. It's refined and it's my new change in state level. Now, what do we have to build a valid entry for us? One, we have liquidity swept 1, 2 times. We have liquidity swept. We have our higher time. We have three higher time frame PDAs. We have this 1 hour gap, this daily inversion fair value gap, and then we have this daily bullish gap over here. So that's two. Three, we have our change in state delivery right here, and we close above it, which means we take our entry over there. I'm taking my entry over here. Stop is at the low, and I'm targeting anything from 1:2 and upwards. So if the trade doesn't offer me at least a risk ratio of 1:2, I cannot take the trade. So we go here, we have our 1:2, but we can always target a 1:3. There's roughly a 1:3. Now, on a prop firm account, I'll be risking 1% here to make 3%. Why am I doing that? Because I've backtested and I know that I can at least get 3% out of the market using this strategy. So risking 1% to make 3%. As soon as we close above this change in state, again, I'm moving my stop to break even right here. And that's exactly how I'm going to be looking to use this entry model to make 1 million rand in 2020.